The foreign exchange market is making headlines and today might mark a turning point for global currencies, especially the Iraqi Dinar, IQD, and the Vietnamese Dong, VND. After years of speculation and slow progress, both currencies have surged to levels few thought possible. According to confirmed reports, Iraq's dinar has now been set at $4.94. These numbers aren't based on rumors. They're the result of official updates from central banks, and they're creating ripple effects across the financial world. Welcome back to Iraqi Dinar News Updates, where we track the most important shifts in global currency policy. If you've been holding IQD or VND, or just following developments, this is a moment that demands attention. These changes aren't part of a temporary hype cycle. They're the product of long-term reform, economic planning, and careful adjustments from Iraq and Vietnam, two countries that are quickly becoming key players in the financial arena. It's starting with Iraq. The country's decision to end its outdated currency auction system has been long overdue. That old framework allowed for manipulation and drained investor confidence. In its place, Iraq has installed a system centered around transparency, international banking standards, and institutional partnerships with names like Citibank and JP Morgan. Alongside this, lower denomination notes have been introduced to help normalize day-to-day transactions. The message is clear: Iraq is ready to manage its own currency, and it's ready to be taken seriously. Iraq's $4.94 rate didn't come out of nowhere. It's the result of years of rebuilding, from fighting corruption to stabilizing oil exports and aligning with global financial institutions like the IMF. This revaluation marks Iraq's break from dependency on the US dollar and reasserts its monetary sovereignty. For years, IQD holders waited patiently while reform after reform was rolled out. Today, that patience is being rewarded, and it's not just a symbolic move. The world's financial eyes are now fixed on Baghdad. On the other hand, Vietnam has followed a more measured path, but with equally remarkable results. The dong's rise to $2.87 reflects a decade of disciplined growth. Vietnam has rapidly scaled up its exports in tech, textiles and agriculture, and major international agreements have been signed with the US and European Union. The country has transformed itself into a global manufacturing hub, and as a result, demand for its currency has soared. Vietnam's inflation is under control, its infrastructure is modernizing, and its GDP growth is projected to stay strong through 2025 and beyond. This upward trajectory wasn't based on speculation, it was built on substance. And it's why economists are now looking at Vietnam as a case study in successful currency development. Unlike countries that chase short-term gains, Vietnam built real value and earned global credibility. That's why the VND is gaining attention and trust. For anyone holding either of these currencies, this may be the financial moment you've been waiting for. These historic rate adjustments don't just mean higher numbers on a screen. They mean real-life potential to change portfolios, investments, and long-term financial plans. But as exciting as this is, it's also the time to move cautiously. Major financial movements come with major responsibilities. Work with professionals. Get proper tax guidance. Don't act on impulse, act with strategy. What makes this moment even more significant is that it could signal the start of a larger shift in global currency dynamics. Iraq and Vietnam have proven that with the right reforms, even smaller economies can become serious contenders. Financial independence, foreign investment, and policy discipline have now turned these two into examples that other developing nations are watching closely. There's increasing talk of a new global currency structure, one where power is more balanced and influence spreads beyond just the traditional Western economies. If Iraq and Vietnam can succeed in revaluing and maintaining growth, more countries may begin to follow. This could trigger a wave of emerging market reforms, pushing even more currencies toward fairer and more accurate valuation. Still, it's important to stay grounded. Iraq faces geopolitical risks, oil price volatility, and the ongoing need for political stability. Vietnam must ensure it avoids economic overheating and maintains control of its rapidly growing export sector. These aren't fatal issues, but they require active management and long-term vision. So, what should you do next? First, don't get swept up in rumors or misinformation. Stick with verified news, like here on Iraqi Dinar News Updates, and be skeptical of wild predictions. Second, consult financial advisors with experience in currency and international investment. They can help you navigate the complex tax and exchange implications. Third, diversify. A strong return from IQD or VND is powerful, but spreading risk across other assets like gold, stocks, or real estate will protect you in the long run. For those who held on through the ups and downs, who ignored the noise and believed in reform, this moment validates your conviction. Whether you choose to cash in, reinvest, or hold longer, just remember, you were part of something much larger than a simple currency bet. You witnessed and participated in the re-emergence of two rising economic forces. We'll continue to monitor every new development from Iraq's central bank and Vietnam's trade ministry. Will Iraq implement further capital controls? Will Vietnam float its currency to capture more market share? These are the questions shaping the next chapter, and we'll be here to break them down. Thanks for staying with us on Iraqi Dinar News Updates. If you found today's analysis helpful, don't forget to like, share, and subscribe. Turn on notifications so you never miss a major update. The financial landscape is evolving, and for the first time in decades, nations like Iraq and Vietnam are leading the charge. Stay informed, stay strategic, and as always, stay ready.